It's time to talk volatility, gamma, market maker impact, and macro with Cem Karsan, Senior Managing Partner at Kai Volatility Advisors, here in time for a busy expiration this weekend and a busy market today. Cem, great to see you.
Good to see you. Good to be back.
So look, rotation that we've been going through, I was just kind of joking that if you come at the king when you've got momentum tech working so well, you better not miss. And it doesn't look like this rotation's working so well.
So we talked about dispersion a couple months ago. It's been 2 months, and we talked about the supportive flows, this summer of George, right?
Right.
Until Wednesday, that was the game for 2 months, right? What was Wednesday? It was Vixpiration. People who've been following us for a while know Vixpiration is the opening of the window of weakness. We haven't talked about July opening. We talked more about August and us getting through the summer. Mm-hmm. That's a window of weakness. Mm-hmm. Importantly, the vol trade is central to this whole operation, mm-hmm. right? What do I mean? The vol supply at the index level is what's caused this historic dispersion. And the short gamma in Nvidia and a couple of these other names was forcing a two-directional move, right? Because the index is pinned and one of the parts of the market is squeezing, the other part has to go the other direction. Now, the other side of this trade is if people are long calls or long gamma and the dealers are short it, if that momentum can even slow a little bit, which it started to about a week and a half ago, that starts making dealers who are now short those calls and long stock they're short gamma. They have to sell that VANA. They have to sell those deltas. And so we started to see the weakness. And it wasn't strong weakness. It was just consistent selling in those names. Mm-hmm. But it opened the door for the weakness now that we're seeing. And all it took was a little macro comment by Trump, right? Mm. We talked about this several weeks ago. The fragility that's been created in this market by taking a name like Nvidia, which in 22 was left for dead despite all of the AI truths about it, because of the fears of an invasion of Taiwan. People did not want to invest in Nvidia because it was considered somewhat uninvestable because of the existential risk. Nothing has changed there. I would argue that we're marching towards a higher probability of that happening as we move forward.
Geopolitical issues?
Geopolitical issues. And to be clear, that's an existential risk to what was the biggest company in the world.
You think this is why we're getting hit in the last 48 hours particularly?
It's a combination of, it can drive a narrative change, mm-hmm. Which is important, but it's hitting Nvidia right at that moment when those calls are decaying and that momentum is waning.
Okay.
Now, third piece of that puzzle, why is this so dangerous, is at the end of the day, if the index vol is still pinned, which it is currently, right, and Russell gamma and calls are now being bought. Druckenmiller bought a tremendous amount right before that move. Other people have also piled in. You're going to start to see a squeeze in those names. And if the index is pinned now, something has to go the other way. And so what's weak, right? The problem is, unlike the original rotation, when you start hitting the generals, mm-hmm. you get people caught. People have been really squeezed into those names.
The net move is not positive from a momentum and a math standpoint, right?
Correct. So this Nvidia complex, what's happening in there is critical to what we're seeing, and it's happening right in the window of weakness, right on time, right? So you have to treat this with respect. Mm. The S&P just broke its 20-day right before I came in here. We've got a quick 15 points down. Yeah. The next stop is the one standard deviation down on the S&P, which is another 50 points from here.
Okay.
That is a critical point, and the time of another week or week and a half of here is critical too. That also lines up, by the way, with right where unched on the month. Why is unched on the month important? Unched on the month is important because that's what drives, that momentum factor drives a reinvestment at the end of the month. So the flows that can come at the end of the month to support and push this thing higher are dependent on what happens here in that period.
Okay, so if you're down at that point,
so if we break down below that, exactly, at the end of the month, now the flows turn from positive to negative. Mm-hmm. And then what sits on the other side of this expiration, the next expiration is SEP. Big quarterly OPEX, a lot of short interest on the put side out there, right? Okay. There's an election behind that, where the vol is also weak.
Mm-hmm. Right? Expectation for the first Fed move too.
Exactly. So vol has been well supplied here. It's well supplied because the July OPEX, you're able to sell puts to the downside, buy things behind it, generally get into cheap vol. But after this OPEX, that may change, and that may change pretty quickly. This is an opportunity to get your hedges while you still can.
Okay. When you look at where we could potentially go here, when you talk about lower, the kind of trap door in this window of weakness, are we breaking it down right now, Cem, or where does that exist? Where is there a level we should be finding support, or is that where we just slammed through at 55.60?
I want to be clear. We don't talk about this in up and down, right? We talk about this in distribution. I think that's the way you have to look at these things. The point is that you have a very short window here of about a week and a half, where if this thing breaks below the 1 standard deviation down in the 20-day, right, that's in a very critical, which is also very close to unchanged on the month. With everything in the lack of vol supply behind it, there is some significant risk to this rally and significant risk to this market. And you have to respect that. So you, at this point, have an opportunity to go get that hedge.
Okay.
Buy it when you can, not when you have to. Right.
16 VIX, if people kind of use that as the shorthand, are we getting a little bit expensive, or is the move that you're talking about in the window of weakness so big that it's worth buying vol here?
We don't like talking about the VIX because we talk about fixed strike vol. Right. Right now, we could slide down and the VIX could go up, but the vol supply may tell you that the vol actually isn't moving. Right now, the vol is not up much, if at all.
Okay.
Right? Underneath the surface, even though you're seeing a higher VIX, right? So if we slide back up, you'll see a slide to a lower VIX, even though that might not change. Point is, this is an opportunity. I wouldn't go look at VIX levels specifically to go buy your hedges while you still can. Now, does that mean go get short? No, it isn't. It means own puts and be long stock. Because if we can bounce here, if we can get through the next week and a half, if we stay up on the month, right, then at the end of the month, you're going to get another push. Right? And then we can reverse back into supportive flows, and then the September flows can now turn positive and push us higher.
When you talk about hedging right now, owning stock, buying the puts, does it make sense to do it on S&P, Russell, individual stock? Where do you go? Where do you get the best bang for your buck volatility in the options hedging to the downside?
The center of this risk sits in the AI names, and in Nvidia. The S&P vol is relatively well supplied, so I wouldn't say that's the best place to be. If this is going to be an existential risk, if this is going to create a tail here, the trade is best played in the leading names, in those generals, whether it's Nvidia or some of those other names.
Okay. It's good to hear you say that, because there's been so much shifting within the market that my analysis has kind of just stayed with, like, look, watch Nvidia, watch the big tech stuff, because it takes so much to offset if they're coming off. I think the fact, too, that this all really kind of started CPI, where we had that big skew, that disappoints from the macro side, too. So the last kind of thing to hit here is on the macro front, when inflation coming in light doesn't create this big liftoff, it kind of breaks some of the narrative a little bit on what moves stocks positively.
It changes the positioning in the marketplace, and it can get people really off sides, and that's what we're seeing. I think it's important to note that a decline here in the market will create a wealth effect that is negative. The reason that the inflation numbers haven't been worse, and that we haven't had a bigger problem, is because the wealth effect has helped support the economy. When I say the wealth effect, I think that's a thing that people throw around. It's important to note we have about $100 trillion in equity. You get a 10% pullback in the market, that is a $10 trillion reduction in capital. Never mind the other 100, 200 trillion that's tied to the S&P. So the dramatic amount of reduction in money supply and collateral, importantly. This is a leverage system. When Nvidia drops, and that's the biggest name in the index, that means people have less collateral, and the leverage that they have gets called back.
Right.
And so this effect is why markets actually lead the economy, not because markets are forward-thinking. Like, that's what people think. Markets control the economy. The other corollary to that is the Fed will tell you all day long that they don't manage the market, but they manage money supply, and the market has a wealth effect, which is money supply. So you better believe they're watching this market. If we continue to decline here, July 31st is not only on the table, it becomes likely. I think people have to take that seriously. That is the one thing that can lead to a quick bounce back, right? But
think the
be
Fed
aware
would
that could be
respond?
I do think they will respond if this decline does continue.
Where's their threshold, you think?
I think it's close to unchanged on the year, which is not that far. On the month, I apologize. On the month.
Wow,
Not
really?
on the year. On the month. I think a little bit further than that. They start to see some vol and the VIX come back up. They will move pretty quickly. Now, again, that would be a net positive in terms of liquidity. But many times we see the first cuts, especially if they're done aggressively like that, can become a lead to a second leg down before there's any other support.
Correct. That's kind of like you reading the guy across the table at the poker game versus the heavy math gamma stuff, though.
Yeah,
right?
Those are both important.
Yeah.
When we talk about reflexivity, it's not just the reflexivity of positioning, it's the reflexivity of the players in the market.
Wow.
They both really matter.
All right, good stuff, Cem Karsan. Glad we got you back.
Always a pleasure.
Fun chat, good and timely. All right, we're in the window of weakness, and enough weakness could put July on the table. Mr. Karsan is a senior managing partner at Volatility Advisors.